What's up, Bitcoin Bulletin fam? Get ready for a lightning-fast rundown of the biggest stories hitting the crypto world. We're talking about major shifts in Bitcoin development, massive institutional adoption, green mining powerhouses, and market volatility that's got everyone talking. Stick around, you don't want to miss this. First up, we've got a deep dive into the controversial actions of Bitcoin, not its proponents versus the core development team. Are they truly champions of decentralization and censorship resistance, or is something else going on behind the scenes? We're breaking down the claims versus the reality, and it's more complex than you think. Then, we're shifting gears to the world of corporate finance, where the top 100 public companies holding Bitcoin have now each secured over 100 BTC, establishing a new multi-million-dollar floor for Treasury adoption. Plus, get this. Hive Digital Tech is powering a significant chunk of global Bitcoin mining with 100% green energy. We're talking about impressive hash rates and a commitment to sustainability. And finally, the market took a sharp turn with Ethereum and Bitcoin experiencing significant drops, leading to massive liquidations. What does this mean for investors and what's fueling this volatility? We've got all the insights you need to navigate these choppy waters. Don't go anywhere. Hit that like, subscribe, and ring the bell. Bitcoin Core versus Bitcoin Knots. Actions speak louder than words. Are the vocal proponents of Bitcoin Knots truly the decentralization and censorship resistance champions they claim to be? A closer look at their actions reveals a stark contrast to their stated ideals, raising serious questions about their commitment to Bitcoin's core values. At the heart of this debate are two critical aspects of Bitcoin: mining decentralization and its use as a global monetary network. Proponents of Bitcoin Knots often champion mining decentralization, highlighting projects like Ocean Mining Pool and its Datum protocol as examples of efforts to distribute power in the mining process. They also claim to be staunch defenders of Bitcoin's role as a peer-to-peer electronic cash system, emphasizing the importance of secure, censorship-resistant transactions. These goals are undeniably crucial for Bitcoin's long-term health and its ability to foster positive global change. However, the reality on the ground paints a different picture. While the Bitcoin Core development team has been actively working on open-source solutions like Stratum v2, designed to give individual miners more control over transaction selection, prominent Knots supporters, specifically Ocean, have remained conspicuously absent. Instead, Ocean developed its own proprietary Datum protocol, which, despite promises of future open sourcing, currently functions as a vendor lock-in, limiting miner options and potentially hindering network propagation speeds. This practice disproportionately disadvantages smaller miners, creating centralization pressures rather than alleviating them. Furthermore, regarding Bitcoin's use as money, Knots software has been observed filtering out essential transactions that support crucial Layer 2 solutions like the Lightning Network, specifically those involving ephemeral anchors for efficient channel closures. This filtering actively undermines scaling efforts, directly contradicting the proclaimed goal of advancing Bitcoin as a monetary network. Projects like Censorship, designed to scale financial transactions, are also impacted by these filtering practices. The community reaction is one of growing scrutiny. Many are pointing to the disconnect between the rhetoric of Knots supporters and their actual contributions, questioning the authenticity of their advocacy for Bitcoin's core principles. The situation has led to discussions about Orwellian doublespeak within the crypto space. This deep dive into developer actions and motivations is just the beginning of what you need to know this week. Stay tuned as we reveal which major companies are doubling down on their Bitcoin investments. Top 100 public Bitcoin companies set new Treasury floor. Corporate adoption of Bitcoin has reached a significant milestone, with the top 100 public companies now holding over 100 BTC each, establishing a new multi-million-dollar benchmark for Treasury reserves. This development underscores the growing institutional confidence in Bitcoin as a legitimate store of value and a strategic treasury asset. The increasing number of public companies allocating capital to Bitcoin signifies a maturing market and a broader acceptance within the traditional financial landscape. Earlier in 2024, The threshold for companies holding over 1,000 BTC was a more exclusive club. But that number has now expanded to 50, with each holding over $100 million in Bitcoin. With over 200 public companies now incorporating Bitcoin into their treasuries, this trend highlights a substantial shift in corporate finance strategies. The $11 million minimum held by the top 100 companies represents a robust floor, indicating that institutions are committed to significant, long-term holdings rather than speculative short-term plays. This sustained institutional interest is a key driver of market stability and growth. Analysts and the broader investment community are closely watching this trend, viewing it as a strong indicator of Bitcoin's increasing integration into the global financial system. The consistent inflow of corporate capital is seen as a validation of Bitcoin's potential as a digital gold and a hedge against traditional financial uncertainties. But the story of institutional adoption doesn't stop there. We're also seeing incredible innovation in the mining sector, with one company powering the network with entirely green energy. You won't believe the capacity they've achieved. Hive Digital Tech mines 2% of global Bitcoin capacity with green energy. Hive Digital Technologies is making waves in the Bitcoin mining industry, achieving a massive 20 AS hash rate and now accounting for 2% of the entire global Bitcoin network's capacity, all powered by 100% green hydroelectric energy. This achievement is particularly significant as it highlights the growing viability and importance of sustainable practices in cryptocurrency mining. Hive's Phase 3 facility in Paraguay utilizes renewable energy sources, demonstrating that large-scale mining operations can coexist with environmental responsibility. The company is currently mining approximately 9 Bitcoin daily, maintaining a healthy 55% profit margin even after electricity costs. The growth trajectory for Hive Digital Tech has been nothing short of explosive. Their hash rate has surged by an astounding 233% year-to-date, with daily Bitcoin output doubling since May 2025. This rapid expansion, pushing past 16 AS in August to reach their current 20 AS, showcases their aggressive scaling strategy and operational efficiency. The Paraguay facility operates at an impressive 18 JTH efficiency, a testament to their advanced technology and commitment to green energy. Hive's ambitions don't stop here. They are targeting an expansion to 25 AS hash rate and aiming to produce 12 BTC daily by U.S. Thanksgiving 2025. This forward-looking approach and focus on sustainable, efficient mining practices are drawing significant attention from investors and environmental advocates alike. Now, while some companies are scaling up with green energy, the broader crypto market has seen some turbulence. Get ready, because we're about to break down a sharp sell-off that shook Ethereum and Bitcoin. Ethereum tumbles 9%, Bitcoin declines 3% amidst massive liquidations. Cryptocurrency markets experienced a significant downturn on September 22nd, with Ethereum plunging 9% and Bitcoin dropping 3%, triggering over $1.6 billion in liquidations within 24 hours, the largest of the year. The sharp sell-off serves as a stark reminder of the inherent volatility within the crypto asset class, particularly when amplified by leverage. Ethereum, falling from nearly $4,500 to $4,075 before settling around $4,200, was the hardest hit, accounting for over $500 million in liquidations. This event underscores the risks associated with using borrowed funds to amplify trading positions, as forced closures of leveraged positions added substantial downward pressure to the market. While Bitcoin's volatility has lessened due to institutional adoption and its growing narrative as a store of value, it remains a volatile asset. Ethereum, often seen as the smart contract workhorse of crypto, is still more susceptible to dramatic price swings, partly due to its different use case and less established institutional backing compared to Bitcoin. The recent market movements highlight that even established cryptocurrencies can experience rapid and significant price corrections, especially when leverage levels approach those seen in previous market peaks. Concerns are also mounting over corporate treasuries that have financed Bitcoin and Ethereum purchases using debt. A market downturn could force these companies to sell their crypto holdings to service their debts, potentially exacerbating price declines. Despite the recent sell-off, both Bitcoin and Ethereum have significantly outperformed the S&P 500 year-to-date, demonstrating their potential for long-term gains, though market participants remain braced for further volatility, with predictions ranging from sharp declines to significant rallies. And that's a wrap on today's Market Movers. But before you go, make sure you're subscribed and hitting that notification bell. All right, Bitcoin Bulletin fam, let's do a quick recap. We saw a deep dive into the controversial actions of Bitcoin Knots proponents versus Bitcoin Core. Then, the top 100 public companies are now holding over 100 BTC each, setting a new adoption floor, while Hive Digital Tech powers 2% of global mining with green energy. Finally, Ethereum and Bitcoin saw a sharp sell-off with massive liquidations, reminding us of crypto's volatility. Don't miss out on any of the breaking news. Make sure you're subscribed, hit that notification bell, drop a comment below with your thoughts, and follow us on all our social channels for real-time updates.